Today you will be learning a scalping strategy that is super easy to understand, to study, and to implement right away after this video, so that you can stop the guesswork and start earning from the markets right away. So these are the results that I did in a quick backtesting session for this strategy. 64% win rate, a 1/2 risk to reward, it shows 1.8 because I did test a break-even system. We were able to do over 20% in a month. In a week we're doing around 6.8k and the daily gain loss is around 4%. Now, who am I? I'm Jody, I'm JorFX. I've been a trader for the last 8 years. I've been a trading coach for 3 years and we've been able to do some amazing things. Now, if you know me, you know that I usually trade on a higher time frame. I like to enter on the 5 to the 15 minutes, but I do like some scalping from time to time. And how I approach this is that I have multiple trading accounts where I can trade different strategies on. I have a scalping account and I have an intraday account. Now, I want to go to the charts right away and start teaching you this strategy. Now, the strategy is very simple, but you need to obey to some rules in order to be profitable with it. So the first rule is only enter between 8 and 9 AM and only enter between 1 and 2 PM. This is GMT plus 2, by the way. You will see on the screen what this will be for your time frame. I will list the most common time frames for my viewers up there. But if you're paying attention closely, you see that it is right before London Open and it is right before New York Open. Now, the second rule is follow the current trend. And what do I mean with the current trend? Is the trend that you're seeing on the 1 minute right now. So we will be entering on a 1 minute time frame and the strategy is a continuation setup. So you want to make sure that you're continuing the current trend. So right here, for example, you will be looking for longs. Right here, for example, you will be looking for shorts. Right here, for example, you will be looking for longs, etc. It will become very clear when I go to backtesting myself. Now, before we continue, I want to let you know that August the 13th at 6 PM UK time, I'm doing a live stream. Completely free to join, but the seats are limited. We will be discussing the best way to pass your first prop firm challenge and also get a payout with it. Now, the seats are limited because we also have a Q&A after. So if this is something you would like to join, I would love to have you there. The first link in the description, you can sign up and make sure you don't miss it. Now, thirdly, wait for price to come to an IFVG, an inverse fair value gap. Now, what is an inverse fair value gap? An inverse fair value gap is a fair value gap that price burst through. Now it is coming back to retest it. For example, right here, a bearish fair value gap, price traded right through it, comes back, retests and moves away. This is another one, inverse fair value gap, price comes, retests, moves away. Now, obviously these are in the wrong direction, but if we would be looking at the right direction, we would have fair value gap right here, price bursts through it, comes back to retest and moves away. So while the traditional fair value gap looks something like this, you have your first candle, second candle, third candle. Second candle shows the gap. You want to see price come back here, retest and move away. We are looking at the inverse fair value gaps. The same thing, first candle, second candle, third candle. Second candle shows the gap, but it has been failed. Price moved through it and is now going back to retest this another way. Now, fourth, wait for price to trade away. Obviously, you want to have a bit of certainty behind your trades. So you can't just put your limit order on here and hope for the best. We want to see price move away. Now, what is very important when price is moving away to know that it is actually moving away is you want to see 2 consecutive candles close below or above each other. So below if we are in a downtrend, above if we are in an uptrend. Again, example right here. Price comes into this IFVG. First candle closes bearish. Second candle closes bearish below it. You enter right here. Stops above here. But in this scenario, we can't put it above here. I will tell you in a second. And one of the two take profit. So talking about that stop loss there, that we can't put it above there, is we're going to do a 5 pip stop loss minimum and we're going to target 2 risk to reward. Now, this 5 pip stop loss minimum, the main reason for this is if you're trading on prop firms, if you're trading most brokers as well, probably anything below a 5 pip will cost you a lot in spreads, probably also commissions because your lot size will be way too big. And that's why I'm saying let's do a 5 pip stop loss minimum all of the time. We're going to target 2 risk to reward. Again, I'm keeping this super simple in and out of the trades. It's only a 10 pip trade. It is a scalping strategy in the end of the day, but that is what makes it very nice because you're in and out of the trade very quickly. And as you have seen in the results right here, you can see we have a 64% win rate, 20R return over only 25 trades. And you can see that only trading a 1/2 system is going to make you a lot of money. Now, A simple addition that I want to bring to this as well, something that I saw during backtesting, and I'm not just backtesting the strategy to make the video, now I'm actually using the strategy as well, but it is something that is in the works, so to say. And that's why I did that backtesting session, to show you the results, to show you the data that this works. And something that I noticed during live trading and during the backtesting of the strategy is that once price is 1/1 risk to reward, put your trade on break even. What I saw super often is that price moves, bam, right away, 10 pips in one go. It doesn't come back to your stop loss or to your entry points unless it is going wrong. This is what I saw. I would say go backtest this for yourself and see if you come to the same conclusion. So this is it. Write this down, take notes, and now let's backtest. We are right here in a fresh week. This is Monday, 24th of March, and it is around 7 AM. In about 1 hour we can take the position. Before we do that, I want to show you the previous positions that I took so that you know I'm not BSing right here. So for example, this one right here. We are in a downtrend, price is moving lower, we're waiting for our entry time frame. It starts right here, 8 AM. We have a bullish inverse fair value gap right here. Price moves through it, moves above, without closing 2 consecutive candles, so this one is invalid. Then we have one right here as well. And basically you're just going to be looking for what are the inverse value gaps that are the most valid and how is price reacting to them. Some can be disrespected, but you want to find the one that is going to be respected. And it is most often going to be like this, so where you have the first one like this, for example, but price doesn't respect it at all. You don't have 2 consecutive candles in the same color, so it doesn't matter. Now price comes here, starts moving down, first one, second one, and you take your entry. Now 95% of the time, I want to see a double close below. But this is an example that I wanted to show you as well, is when you have a candle like this right here. It moves below, moves above, but it closes very neutral. Me personally, I like to take the leap of faith there as well, and I take the position. This is another good one. We are bullish. We have an inverse value gap right here. Price moves with 2 consecutive candles, so this is the entry. We do a minimum of 5 pips stop loss. 10 pip target, and that's the trade. Another one right here. This is a very small fair value gap, but we have tons of fair value gaps right here to choose from in theory. Price moves up higher, moves lower into this fair value gap. 2 consecutive candles that are bullish. We take the entry, stop loss underneath this low, which is in this case a 5.7 pip stop loss, and we target a 1/2. Now, let's go into live backtesting, and let's see if we can replicate these results. So what we want to do is we want to go to 8 AM to begin. So that is right here. Now, as we can see, price is pretty bullish. So we want to take basically continuation of this long. So let's wait until an inverse value gap is formed. We do have this one right here, but yeah, price did not really use it actually. Did not really go through it, come back to it. So that could be the case right here. But let's wait until something is shown. Price is pretty aggressive coming out of this area, but we don't have 2 consecutive candles, so we have to wait. Price is moving up higher without us, which is completely fine. This right here could be something to retest in the near future. Okay, price pierces completely through it and is going lower now. In this case, I don't switch biases. I stick with the bias that I have from the morning, and I basically just wait. As you can see, we have no inverse value gaps right here. We do have a couple right here. I think I only want to be looking at this one, as this one has been untapped. The other ones have been used a little bit, but let's see. Okay, we have now 2 bullish consecutive candles. So we are entering our position. In this case, we need to do a minimum of 5 pip stop loss. We take a 1/2 right here. We place the order and save. Right now, like I said, I want to experiment with it. Let's just put it at break even. Okay, 1/2 hit. That's a very nice thing about strategy. Very quick in and outs. This one was entered at 8:57, so that's all right. Still within the window, and the target got hit. Now let's go to the afternoon session, and again we want to go to 1 PM like this, and right now we're falling. So I'm actually going to be looking for bearish positions. Now, why am I saying bearish positions? First of all, we're going down right here. Second of all, we were unable to break this high, so we are respecting it. Probably we need more liquidity. Okay, price at the first one. Maybe it goes to the second one as well. It doesn't. We have 2 consecutive bearish candles, so we are entering like this. 5 pip stop loss, like this, and we're targeting a 1/2. Place the order. Now with FX replay, we can also do auto break even when price at 1/1. So let's do that. Okay, again, a very nice take profit. That's 2 for 2. And it's something that I'm enjoying quite a lot, is that you have such a high win rate on this strategy. Now let's do one more day. So let's go to the next London session. Price did fall right here and is now a bit consolidating. Now, what do you do when it is consolidating? You basically follow the trend that was before, because you can't guess that it's going to turn around unless it is really showing you it is breaking out of this zone. So let's wait for price to hit 8 a.m. Right now we went down lower, and one of the inverse vertical gaps that I see right away is this one, but it has been tapped already, and perhaps this one is also a pretty nice one. But yeah, maybe it has also been used by this one. We do have this one like straight up, but I don't know if I like it because it is so close to the entry time frame, if that makes sense. Okay, price is moving up very aggressively right now. We did take out these lows, so probably liquidity being taken. We are moving away. Again, like I said, I'm not switching biases because of something like that. What we can do is we can look for, okay, what are some inverse vertical gaps that might get tapped in this rash move? Okay, this one is ignored. Price took out these highs. We are seeing 2 consecutive candles. And here we don't have a close above. So you know what? I'm gonna enter right here. And let's do a 5 pip stop loss again. 1/2, risk to a watt. And let's take the order. Auto break even. Safe. And there you have it. There you have it. It works like a charm. I think the win rate right now is almost at 70%. It's really, really good. Now let's do the last one. Next session. Price moved down lower to take liquidity like we thought it would. It's now moving up higher. So now we switch biases and we're going to look for longs. Now we want to wait for price to hit 1 p.m. So that is right now. And we want to see, okay, is it coming into an inverse vertical gap? We have this inverse vertical gap right here, where we are right now. We have this inverse vertical gap, but it's overlapping with this one, so I'm ignoring it. And maybe we can also have a look at this one. Now, in theory, we already have 2 consecutive candles. So I'm gonna enter right away. It is right on the entry time frame, but that doesn't matter that much. So 5 pip stop loss, 1/2, risk to a watt. Let's place the order, auto break even, safe. And there we go. There we go. 4 on 4. Literally. Every trade that we took was a win. It's gonna look fake right now. It's probably gonna look fake, but it works like a charm. 70% win rate. 30 trades. And you can do this for yourself. I hope you took notes. Go for yourself. Go to FX Replay and try this out. Try this out and let me know how it goes. And if you don't understand something, watch the video back. Rewatch it. Or send me a DM on Instagram. I will help you out. Guys, I hope you enjoyed this video. I hope you learned something from it. I hope you're gonna implement this one. And I'll see you in the next one. Bye bye, guys.